So today, October 7th, the stock market dropped about 600 or 700 points the last time I looked. The market is down probably around 25%. So I wanted to come on and talk about the last time we had this type of inflationary environment, interest rates rising to the level, not to the level, but the amount that they're rising. And I want to talk about the period between 1972 to 1974, where the stock market dropped 50%, and today we're down 25%. The stock market in 1972 dropped about 32%, around in that area, and then in 73 it dropped another 20%, which gave it about a 50% fall. Um, Back then in 72, here's how high inflation was at the time, around 12%. And we were about in that area, even though we see it coming down. Um, and it took time to drop, as you can see. And what was important back then, inflation was probably, well, interest rates was probably 10%, and they rose it up to 20%. I mean, up until like 1982. But today, it might be what makes it so much different is interest rates are at zero, and it's up to almost the 10-year yield is at 3.88 today, which is almost up 4 times as compared to only almost doubling. Um, here's where the market was at in 72. So in 72 to 74, you can see it dropped to 371, which was about a 50% fall. The, and this all sounds kind of bad, but that's not the purpose of it. The purpose of it is how this is an opportunity for long-term investors to be able to invest at a time with the stock market falling due to inflation and due to the Federal Reserve raising interest rates. And the big point of this whole chart is if you see this, yeah, that's what you want to see over time. You investing and as a long-term investor.